Hey guys, hello and welcome to this YouTube series. I'm Manisha Gupta and we're going to talk about gold this time around, which is trading at a multi-month highs, and we have seen the gold come back in mainstream where people want to include it in their portfolios as a financial instrument. While gold of course continues to be bought in physical markets in sense of jewelry, bars and coins, but in the physical element, in the financial element as well, it is being bought now as ETF, in futures, on forwards, gold bonds, e-gold, digital gold. There are various ways on buying gold. And we have yet another way of doing this now, while SEBI has issued a consultation paper on a spot gold exchange. Well, remember, spot gold exchange has been in conversation for many years now, but we have a consultation paper coming now. In the last budget, the FM had said that SEBI would be a regulator for gold exchange and WDRA would look at logistics, it would also look at assaying and vaulting, etc. But the latest discussion now says that SEBI would be an overall regulator and will oversee not just the exchange itself and the financial aspect of it, but also logistics, assaying, vaulting, etc. So SEBI is going to be a wholesale regulator when it comes to the spot gold exchange. Well, important is to understand on how this would work. First of all, you can take your physical gold to and you can get it converted into an electronic gold receipt. So you take this gold and you go to the vault manager and that would get it converted. Now you can trade it like an equity share and convert these back into physical gold when you want it like that. This market is open for retail investors, for banks, FPIs, jewelers, bullion dealers. So there's a whole host of people which can make use of this spot gold trading. This is the first time this is happening in India. This is as akin to spot markets itself, just that it is trading on an exchange here. Also, the gold exchange would allow trading akin to spot market, as I said, and also enable greater integration and also transparency in the markets. So how would the exchange work? To begin with, the SEBI would work with the vault manager, clearing corporations, etc. So when you have gold, you take it to SEBI and these people, they will facilitate creation of an electronic gold receipts and for its trading. This EGR then you can trade on the exchange like a share, and when you want your gold back, you take this EGR, you go to the vault manager and they would give you the physical gold and extinguish this EGR. Now what happens is that this can be bought and sold on the exchange like a share here. This would be traded on a daily basis on all the known exchanges there, and the physical gold, when you want it back, you would have to accumulate minimum of 50 grams, then only you can take your physical gold back. As far as the trading goes, well, that can happen in denominations of 1 kg, 100 grams, 50 grams. Even smaller denominations of 5 to 10 grams are allowed in this. Now, within all of this, while SEBI of course is an important regulator here, the vault manager is going to be an equally important entity, and the SEBI's consultation paper says that the entity has to be registered in India. That's one that can make you a vault manager, and the other is that for you to be a vault manager, the net worth should be at least of 50 crores, and that is what the applications SEBI is asking for this time around. What the markets are awaiting in sense of clarity right now is that, one, when you start to trade it on the exchange, would it be attracting an STT like other securities or shares do? And two, when you want to submit this EGR and you want to take physical gold back, then would you have to pay a GST on that? So there are two taxes that the markets are awaiting clarity on. The other thing is, since the gold is being given to the vault manager, it's getting assayed, it's getting vaulted, there are logistics also involved there. So when it comes to all of this storage, delivery, vault charges, who pays that? Is there a cap to that? This is the second thing that the markets are waiting for. The third is that as of now, SEBI has in its consultation paper said that it needs to be a minimum 50 grams before you can take that physical gold back. Can this denomination be brought lower? Because if we are looking for retail participation for small and bigger jewelers, for bullion dealers to be part of this as well, they wouldn't always perhaps need or want 50 grams. So a smaller denomination, can that be worked upon as well? So while SEBI clearly has very efficiently come out with this consultation paper, and markets do believe that it's not going to be too long before we see this spot exchange actually being launched, there are few questions that still need to be answered, and that's exactly the kind of feedback and suggestions that SEBI is currently looking for.